Good morning, everyone. I'm excited to welcome you to today's presentation. We'll be exploring a compelling case that is essential for students, faculty, and industry stakeholders alike. Today's focus is on a powerful example of how venture funds allocate capital, how consumer trends shape investment strategies, and how D2C brands are scaling in India's rapidly growing consumption economy. Our discussion is centered around a recent milestone: Fireside Ventures closing their fund IV at $253 million, a clear indicator of the big push for Gen Z and alpha-driven consumer brands. Over the next few slides, we'll delve into what makes this news so significant and what it reveals about the evolving landscape of entrepreneurship and consumer markets in India. So, let's get started. Let's dive into the focus of this slide, which is on the next generation of iconic Indian consumer brands. These are brands that are set to define the future of Indian consumer markets. Interestingly, the fund dedicated to this space is larger than Fund III, which had $225 million in 2022. That shows a real confidence and momentum in this sector. Major investors backing these initiatives include the Abu Dhabi Investment Authority, or ADIA, along with U.S. pension funds and other global institutions. This international interest highlights how attractive and promising the Indian consumer story has become on a global scale. The plan is to invest in around 25 to 30 early-stage startups. These are early but promising companies that could grow into the next big brands. Now, a quick highlight: Fireside Ventures, which is one of India's most influential consumer brand venture capital firms, recently closed its fourth fund at $253 million. This is a strong signal of renewed confidence in India's consumption story, indicating that investors are very optimistic about the growth potential here. So overall, this slide emphasizes the significant capital flow, the international investor confidence, and the strategic focus on nurturing the upcoming wave of iconic Indian brands. It all ties back to the broader theme of India's evolving consumer landscape and its global appeal. Let's explore how technology is transforming consumer experiences and personalization. AI-led solutions are at the forefront, enabling brands to offer more tailored and efficient interactions. We're also seeing a rise in community-driven brands that leverage storytelling and purpose to build stronger connections with their audiences. Digital-first direct-to-consumer, or D2C, models are becoming increasingly popular, especially in niches like clean beauty, men's grooming too, and Ayurveda-inspired products. In the broader beauty and personal care space, there's a focus on functional foods, mental wellness, and clean-label nutrition products, reflecting a shift towards health-conscious choices. Moving into health and wellness, digital natives are reshaping how we consume, driven by a demand for authenticity and transparency. Finally, when we look at Gen Z and Alpha, their behaviors are influencing these trends significantly. They prioritize genuine experiences and brands that align with their values. All of these focus areas highlight how the market is evolving with technology and consumer expectations at the core, supporting our overall theme of innovative, personalized, and purpose-driven growth. Let's take a moment to look at Fireside's track record in building category-defining consumer products. We've successfully scaled over 100 brands, which shows our ability to identify and grow brands that truly resonate with consumers. Throughout our journey, we've maintained consistent capital deployment across 3 previous funds, ensuring steady support for our portfolio companies. We've seen remarkable success with 3 fund generations, demonstrating our experience and commitment over time. Importantly, multiple of these portfolio companies have achieved billion-dollar valuations, a clear indicator of the value we're able to create. Even more impressively, we've built 5 unicorn-scale exits, companies that have gone from 0 to over 1,000 crore in valuation, making Fireside one of India's most recognizable names in consumer branding. All of this underscores our stellar track record, which aligns with our overall mission to create impactful, category-defining brands that stand the test of time. Now, let's take a closer look at why micro-influencers and peer recommendations are so powerful in driving purchase decisions today. These smaller influencers often have highly engaged audiences, and their recommendations tend to feel more authentic and trustworthy. People are more likely to trust a friend or someone with a niche following than traditional advertising. This shift is also reflected in the community influence we see. People demand transparency and want to hear genuine stories about brands. They're looking for purpose-driven narratives that align with their values, not just products for sale. Moving on, authenticity seekers are out there experimenting more than ever. They're willing to switch brands if they find something that offers better value or a compelling story. This means brand loyalty is lower than it used to be because these consumers are constantly exploring options. And of course, growing up with smartphones, social media, and seamless e-commerce experiences has made digital natives of Gen Z and Alpha. These groups are truly digital first. They expect instant access, personalized interactions, and authentic connections with brands. So, understanding these dynamics is crucial, because Gen Z and Alpha are really game changers. They're shaping the future of consumer behavior in profound ways. Now, as we look ahead with Fundraise, the focus will be on accelerating our Wave 2 brands. This means we're aiming to capture the premium segment and meet more sophisticated consumer needs. We'll leverage AI-enabled tools to better understand and serve our customers, ensuring we're always ahead of market trends. In Wave 2, we'll also prioritize regional premium products, mental wellness, clean beauty, and functional foods, areas where consumers are increasingly seeking quality and authenticity. Starting from 2024, our strategy will shift towards traditional categories like consumer electronics, nutrition supplements, and skincare basics, which have shown consistent growth from 2015 to 2020 during Wave 1. This evolution reflects how India's D2C market has matured over the years, moving from foundational categories to more premium and diversified offerings. It's about building on our past successes and adapting to new consumer preferences, making sure we're not just keeping pace, but leading the way forward. Let's delve into why $253 million in early-stage capital is so significant. First, this funding provides adequate capital for multiple funding rounds, which is crucial for supporting a startup's growth trajectory. It also enables brand evolution and retail expansion, allowing companies to refine their offerings and reach more customers effectively. Moving on, having a long-term runway, typically 25 to 30 startups, helps us diversify across different categories. This diversification is key because it reduces concentration risk, meaning we're not overly exposed to any single sector's performance. It adds stability and resilience to the portfolio. Next, the role of VC involvement from day one is vital. Early engagement shapes the product, positioning, and go-to-market strategies right from the start, setting a strong foundation for success. This hands-on approach influences how well a startup can scale and adapt. Additionally, early-stage investments tend to offer better unit economics and higher upside potential. Investing early allows us to capitalize on the growth phase when returns can be significantly higher, especially in a vibrant consumer market. Finally, it's worth noting that most Indian VC capital recently focused on late-stage tech companies. However, during 2023-24, investment in consumer brands slowed down. The large pool of early-stage capital indicates a renewed confidence in consumption growth, signaling that now is a strategic time to invest early and support emerging consumer brands. This slide highlights how international participation truly validates India's premiumization story and the aspirations of its middle class. It's a key indicator of long-term, predictable returns that investors are betting on. Many global financial institutions see India as the next big consumption powerhouse. Long-term institutional capital, such as U.S. pension funds and sovereign wealth funds, are actively seeking exposure to emerging markets like India. Their backing signals a strong vote of confidence in India's economic resilience and growth potential. For example, the Abu Dhabi Investment Authority, or ADIA, is a major player in this space, along with other significant limited partners or LPs who are betting on India's future. Overall, this international interest underscores a critical theme. India is increasingly becoming a focal point for global investors looking for long-term growth opportunities. Their confidence reinforces the idea that India's economic story is not just local, but truly global, and it's attracting the kind of institutional capital that can fuel sustained growth. As we look ahead, it's clear that maintaining strong unit economics is crucial as we scale aggressively. This means balancing growth with profitability, which can be quite a challenge. One key aspect is margin pressure, especially when expanding offline, since that requires different capabilities and working capital compared to digital channels. Another important factor is retail complexity. We're competing in a crowded space with hundreds of brands vying for the attention of Gen Z consumers. This makes standout branding and engagement more critical than ever. At the same time, customer acquisition costs remain steep in our highly competitive digital landscape, which we often refer to as high CAC. This underscores the need for efficient marketing and strong customer loyalty. We also face critical challenges across different categories, from apps and supplements to therapeutic products. Mental wellness is a rapidly growing segment. It's a premiumized market where consumers are willing to invest more in their mental health. Similarly, pet care is evolving with modern science blending with traditional wisdom, creating new opportunities for innovative products. Ayurveda, too, is another exciting trend. Consumers are demanding transparency in ingredients and sustainable sourcing, which aligns with the clean label foods movement. Additionally, vernacular storytelling and emphasizing local authenticity open doors for regional premium brands to resonate more deeply with local consumers. Looking into the future, these emerging opportunities represent both challenges and avenues for growth. Navigating this landscape requires agility and a clear understanding of where consumer preferences are headed, so we can position ourselves for success in this dynamic environment. Now, moving on to how this $253 million fund is shaping the future of Indian consumer brands. This fund is really driven by the latest youth trends, the rise of digital distribution channels, and strategic collaborations between venture capital and brands. It's a bold step to define the next generation of iconic Indian companies. Fundraise is a major milestone in positioning India's emerging consumer giants. Fireside's approach combines formulation expertise, a proven brand playbook, guidance on supply chain management, and marketing support, creating a comprehensive model for success. What's really interesting is how VC-led brand incubation is evolving. Modern Indian brands are winning by leveraging micro-influencers, engaging digital communities, and telling compelling stories. This isn't just about selling products anymore. It's about building a community that shares values and lifestyles. And at the core, a brand is really a blend of community, content, and commerce. These elements work together to create authentic connections and sustainable growth. We also see that population structure is a key driver here. Demographics influence demand, inspire product innovation, and guide where capital gets allocated. Essentially, venture capital follows these demographic trends closely, investing where the growth potential is highest. Finally, for our MBA stakeholders, the key takeaway is understanding how these trends shape investment opportunities and brand building in India. Recognizing the importance of community-driven content and demographic insights is crucial for navigating this rapidly evolving landscape.